Welcome to the WorldWire update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. American soybean farmers are facing a catastrophic collapse. Their biggest customer, China, has stopped buying their crops. Fallout from President Trump's aggressive tariffs on Chinese goods. Warehouses are overflowing, prices have plummeted, and farm families are on the brink. The U.S. agricultural economy is shaking as the trade dispute escalates, leaving farmers feeling abandoned. For generations, these farmers relied on a predictable global market. Now that predictability is gone. President Trump remains defiant, insisting tariffs are making America richer, even as farmers lose their most crucial export market. Meanwhile, Brazil is seizing the opportunity, rapidly filling the void left by the U.S. and signing new contracts with China. This isn't just a temporary shift. It's a fundamental realignment of global trade that could sideline American farmers for years. The crisis is about more than numbers. It's about the survival of a way of life. Financial pressure is pushing families to the breaking point, turning dreams of passing down the farm into nightmares of debt. As the 2025 harvest continues, urgency grows. Farmers watch their livelihoods wither, caught in a trade war they didn't start. They look to Washington for answers, but so far, comfort is in short supply. The heartland waits, hoping for a lifeline before it's too late. This crisis is the direct result of President Trump's high-stakes trade gambit. In early 2025, the administration imposed steep tariffs on Chinese goods, aiming to punish China for unfair trade practices. China retaliated immediately, targeting U.S. agriculture and halting all soybean purchases. For years, China was the top buyer of American soybeans, over half of U.S. exports, worth $13.2 billion last year. The sudden loss of this market sent shockwaves through the Midwest, upending the foundation of farm profitability. The tariffs, meant to project strength, instead severed a vital economic lifeline. Trade wars are brutal. Each side targets the other's most vulnerable sectors. For China, soybeans were the perfect pressure point. By cutting off purchases, China aimed to squeeze Trump's political base and force a policy change. Now, fields across Iowa, Illinois, and North Dakota represent financial risk, not reward. Farmers planted for a market that vanished overnight, leaving them with unsold crops and mounting debt. The trade war, once a distant headline, is now a daily reality, one that threatens to reshape rural America for years to come. The product that once symbolized U.S. agricultural strength now highlights its vulnerability. Farmers are left storing crops indefinitely, watching prices fall and uncertainty grow. The harvest of 2025 is one of fear, not hope. As American farmers lose ground, South America is booming. Brazil, already a global agricultural powerhouse, has become China's top soybean supplier almost overnight. Chinese importers have pivoted to Brazil, driving record export volumes and new long-term contracts. Brazilian farmers are expanding operations and investing in infrastructure, aiming to lock in their dominance even after the trade war ends. Argentina is joining the surge, suspending export taxes and triggering a $7 billion commodity sales spree in just days. Argentine corn acreage is projected to jump 20% next season, further saturating the market. The world's demand for soybeans isn't waiting for U.S. politics. Buyers go where supply is reliable and affordable. For every American farmer losing a sale, a Brazilian or Argentine farmer gains one. The U.S. is losing ground in a zero-sum game. While Washington debates, South America builds partnerships and profits. The global market is moving on, with or without the United States. Behind the headlines, farm families are fighting for survival. With China gone, crop values have collapsed while costs for fuel, fertilizer, and seed keep rising. Many farmers are deep in debt, with no clear way out. Storage bins and silos are overflowing with unsold soybeans, some left exposed to the elements. Every bushel in storage is a reminder of lost sales and mounting losses. The emotional toll is immense. Farming is a legacy, and the fear of losing the family farm is crushing. Stress, anxiety, and depression are spreading through rural communities. The Gackle family in North Dakota, once exporting 70% of their soybeans to China, now faces a $400,000 loss this season. Their story is echoed across the country: impossible choices, selling off land, or taking on more debt in hope the market turns. The real cost of this trade war isn't just financial, it's measured in broken dreams and futures put on hold. Farmers feel abandoned, their livelihood sacrificed for a political fight they can't control. The crisis is personal, and the stakes couldn't be higher. As the crisis deepens, farmers' pleas grow louder. The American Soybean Association has warned the White House for months. Farmers can't survive a prolonged trade war. In August, they sent a letter to President Trump urging immediate action to reopen the Chinese market. The response? Silence. Farmers are frustrated by empty rhetoric and social media posts, not real solutions. They want contracts, not promises. Support for Trump is wavering as patience turns to anger. Why must their livelihoods be the price of tough talk on China? South American competitors thrive while U.S. farms teeter on the edge. The government's relief plan, lower input costs, new markets, and some financial aid, feels like a bandage on a gaping wound. Farmers don't want handouts. They want their market back. They want to earn a living through trade, not subsidies. Until Washington delivers, hope is fading in the heartland. The numbers tell the story. U.S. soybean sales to China, once $13.2 billion, have vanished. Prices have crashed. November futures hover around $10.13 per bushel, below the cost of production for many. Soybean stocks are expected to hit 325 million bushels, near record highs, with more on the way as harvest ramps up. The glut is driving prices even lower, and the pain is spreading to corn and wheat. Corn futures have dropped to $4.22, wheat to $5.20. When one crop suffers, others follow. Meanwhile, global competitors like Russia are consolidating their dominance in wheat exports. Wall Street may be booming, but that prosperity isn't reaching rural America. Land values are softening and farmers' net worth is evaporating. The trade war has erased billions in value and pushed a generation of farmers to the brink. The market is oversupplied, demand is weak, and the future is uncertain. The crisis is no longer just a policy debate, it's a financial disaster unfolding in real time. Farmers are left with tough choices and little hope for a quick turnaround. The numbers are clear. American agriculture is in deep trouble. As September ends, American farmers face an uncertain future. All eyes are on upcoming U.S.-China trade talks in Spain, where a breakthrough could reopen the market. Farmers hope for a diplomatic solution, but after months of broken promises, optimism is cautious. The government's relief plan offers some help, but it's no substitute for lost Chinese demand. The market remains volatile, reacting to every rumor and report. Weather could speed up the harvest, worsening the storage crisis. Farmers must make critical decisions with little information and no guarantees. Their resilience is tested daily, but resources are running thin. The fate of the heartland now hinges on whether diplomacy can end the trade war. Until then, farmers wait, hoping for a sign that a better season is coming.